Okay, in this short presentation, we're going to have a look at total deposits in banks in Ireland for the last number of years. The figure for total deposits is rather alarming if you look at what's happened over the past 12 months, with a dramatic drop from close on 900 billion this time 12 months ago to under 600 billion now. So 300 billion outflow of deposits in just over 12 months. The rate of decline has moderated recently, but a bit of stabilisation in the August figures is not sufficient to suggest that deposits in the Irish banking system have stabilised. So this issue has got a bit of coverage recently, particularly with a front page story in last Saturday's Irish Times, suggesting that deposits in Irish banks were increasing and increasing quite significantly. But as we'll see, that was not the case. So if you look at deposits in Irish banks, you can see that around the time of the infamous bank guarantee in September 2008, there was an increase in deposits, then a bit of fluctuation, but largely fairly stable during the period of the guarantee. But it was only when the guarantee expired last August that bank deposits began to leave the system, the Irish banking system, and do so at quite an alarming rate. If we look at the source of bank deposits in Ireland, we can see the main reason for the decline is deposits from the rest of the world, i.e. deposits outside of the Eurozone. So deposits from the UK and sterling, deposits from the US, and deposits from other non-Eurozone areas. Irish resident deposits have been trending downwards recently, from about 350 billion to just below 400, or sorry, 350 billion just below 300 billion, and Eurozone deposits have also shown a downturn, but most of that occurred in the immediate aftermath of the expiration of the blanket guarantee, and has been rather stable then for the past while. So the suggestion in Saturday's Irish Times was that deposits from non-Irish residents or foreign deposits had increased significantly in Irish banks. If we combine the previous two lines of non-residents, so if we take this blue line of Eurozone residents, excluding Ireland, and this red line of the rest of the world, i.e. non-Eurozone deposits, and combine them into a line representing non-Irish residents, it did tick up ever so slightly in August. But this is not a significant rise. As you can see, the downturn since the expiration of the guarantee it has been trending downwards, but not at the same rate for the past while. So the slight uptick in non-resident deposits is not that significant for August, and definitely not deserving of a front page headline in the Irish Times. While the reporting is accurate, maybe the implied significance of it is not. When looking at total deposits in the Irish banking system, it's important to consider the different types of banks that operate in Ireland. There are domestic banks which operate essentially retail services into the Irish economy, and there are also other banks, mainly banks based in the International Financial Services Centre in Dublin 1, which have very little impact on the local economy. They operate out of Ireland, but they're not necessarily operating within the Irish economy, so changes in deposits here are unlikely to have a significant effect on the economy. And we can see that a lot of the drop in bank deposits in Ireland has occurred in these other banks, so the significance of that would be reduced. If we look at domestic banks, we can see that these two though have suffered a substantial drop in deposits. So while the initial graph we have of the total drop in deposits in Irish banks is quite alarming, the overall drop for domestic banks, also drop for retail services, is from just over 500 billion to about 350 billion. Again, you can see that once the guarantee came in, there was an increase in deposits into the Irish banking system, the domestic banks, a general downward trend during the period of the guarantee, but not that rapid. And then once the guarantee expired, a fairly rapid decline in banks or in deposits out of the Irish banking sector, out of the domestic banks in Ireland. And even domestic banks themselves must be subdivided into two categories. There are those banks which have attracted most media attention under the bank guarantee, which are the covered banks, those actually covered by the guarantee. So AIB, Bank of Ireland, EBS, Permanent TSB, and of course Anglo-Irish Bank and Irish Nationwide. So there has been some mergers and etc. in across those six banks, but they still exist, if not in name. And we can see that most of the drop and changes in deposits in the domestic banking sector have occurred amongst the covered banks. So the rise towards the end of 2008 was primarily in the covered banks once the deposit guarantee scheme, or the blanket guarantee scheme, was introduced. Relatively flat then for the next 2 years, and then once the guarantee expired, a fairly rapid decline in deposits in these 6 covered banks. Deposits in the non-covered banks haven't shown the same levels of volatility as seen in the covered banks. So non-covered banks include the likes of Ulster Bank, National Irish Bank, Bank of Scotland when it was here, and other small players in the Irish banking sector. So banks that would have a subsidiary in Ireland but would essentially be foreign owned. The domestic banks under the covered banks are the Irish owned banks, and the greater majority of those now are now state owned. So it's amongst these covered banks that the greatest decline in deposits has been amongst domestic banks in Ireland, and there's little to indicate that we're seeing a significant increase in deposits in the covered banks. There is a minor increase in August, but the general trend over the past year has been down, and down quite dramatically. If we look at who has taken their deposits out of the covered domestic banks, so this decrease of almost 150 billion in deposits in the covered banks, we can see a slight downward trend in deposits from Irish residents, so maybe 60 or 70 billion reduction in deposits from Irish residents, but most of the decrease has been from the rest of the world deposits. Other Eurozone deposits were small to begin with, but of course have got even smaller, but the most rapid and most significant decrease has been in deposits from the rest of the world. So deposits outside the Eurozone have left the covered domestic banks, and these have almost halved in the space of 12 months, with most of the decline occurring in the immediate aftermath of the expiration of the original blanket guarantee. Again, you can see the actual increase because of the guarantee occurred from rest of the world residents, which would be the UK as it's outside the Eurozone, and then decline as soon as the guarantee expired, occurring towards the end of 2010. So again, looking at, say, foreign deposits in the covered banks, there is little sign of a recovery here. So while the headline said significant increase in foreign deposits in Irish banks, as we're primarily interested in the covered banks, these are the banks we own and the banks we're on the hook for, there is no significant increase, or in fact any increase, in deposits in these banks, and the general trend for the past 12 months has been down. If we look at these rest of the world deposits who are taking their money out, what we can get here is a breakdown across all banks operating in Ireland. But when looking at the movements, we can clearly see who has been taking their money out of banks operating in Ireland. So this again is for all banks, so it's IFSC banks, non-covered domestic banks and the covered banks. But because of the changes, most of the fall in rest of the world deposits has been amongst other financial institutions. So banks not leaving money on deposit with Irish banks. So while a lot of the fall in deposits in the covered banks has been amongst rest of the world residents, we can see from this graph that of those rest of the world residents, the key extractors of deposits from Irish banks are other banks, monetary financial institutions. Private sector deposits have fallen, but not by a huge amount, and government deposits from the rest of the world were very low to begin with. So mainly it has been banks taking money out of the Irish banks, and I'd imagine primarily banks from the UK, non-Eurozone deposits would be deposits from sterling, and they could be from other non-Eurozone countries as well. When looking at other Eurozone residents, again the same story applies. An increase in deposits from monetary financial institutions, banks placing money with the Irish covered banks, and then a huge decrease as soon as the guarantee expired. So although billions of euros of deposits have left the Irish banking system, it has been from other banks. So private sector, other Eurozone deposits have been relatively stable. There is some unusual patterns in general government deposits in Ireland, in Irish banks, but this is probably mainly due to the IFSC rather than domestic or covered banks operated in Ireland. But again, the decrease has been from banks, other financial institutions, monetary financial institutions, taking money out of the Irish banking system. If we look at Irish resident deposits in the covered banks, so how much money are we placing into the 6 covered banks? So Irish banks having deposit money with themselves, deposits from the private sector, households and firms, and deposits from general government. And as these are Irish resident, is a deposits from the Irish government. So we can see declines in both deposits from other banks and a gradual and slow decline from private sector. So while there is talk of falling deposits in the covered banks, there hasn't been essentially huge withdrawals from the Irish private sector, but you're still talking the withdrawals of close to 30 billion over maybe an 18-month period. So it is quite substantial. But of the hundreds of billions which have left the Irish banking system, the greater majority of that has been from monetary financial institutions. The strange patterns in Irish government deposits with the covered banks is largely due to the recapitalisation process. The money used, or that was to be used for recapitalisation, was borrowed in the early part of the year, and in the run-up to the general election, Brian Lenihan delayed the recapitalisation of the banks, but we had drawn down the money from the EU and the IMF. So about 20 billion remained on deposit with the covered banks for a period of 3 or 4 months, and then as we got into July, this money was then used to recapitalise the banks. So we withdrew it as a deposit from the banks and then used it to increase their capital. So moved it around within the banks, and then general government deposits are now down to where they were for much of the preceding period, just around 2 billion. So quite low. So the increase here to 20 odd billion was just because of the recapitalisation process. So it was a temporary increase. When looking at deposits from Irish residents in the non-covered domestic banks, so in your Ulster banks, National Irish banks, and other non-resident banks, there hasn't been a huge amount of movement over the past year and a half or so. In fact, from the private sector, from households and firms, there's been a slight decline over the past 3 or 4 months. So not an indication that the Irish private sector is taking or moving deposits to the non-covered domestic banks, so the foreign-owned banks, and in fact a slight decline over recent months. Looking at Irish resident deposits in non-domestic banks, so this would mainly be the IFSC, we can see the banks themselves have less money in deposit with these other banks, but there has been an increase in private sector deposits in banks which don't have Irish subsidiaries, which have operations in Ireland but don't necessarily have Irish subsidiaries. An additional source of deposits, a key source of deposits for the Irish banks, is now central banks. So the funding of the Irish banks doesn't really come fully from deposits anymore. They've had to tap into a huge way into money borrowed from the European system of central banks. So the ECB is providing huge liquidity to Irish banks. And you can see this beginning in September 2008. The Irish banks had difficulties in accessing funding, and a huge increase in ECB funding. It dipped then during late 2009, early 2010, increased again at the end of 2010, and has been trending down recently. But like with deposits, it's important to note that of the banks operating in Ireland, we have to distinguish between domestic banks and other banks. So the domestic banks are those that have Irish subsidiaries, are basically Irish operations, where other banks are banks that mainly just have Irish operations, aren't part of the domestic economy, and they have taken a significant amount of money from the ECB as well. So all the money coming to Ireland as part of the ECB liquidity isn't necessarily going to domestic banks. With domestic banks, we can again break it down into covered and non-covered banks, but here the distinction isn't as important, as non-covered banks are now using very little liquidity from the ECB. It's only just over 2 billion being used by non-covered banks. So of the 69 odd billion of ECB funds being used by domestic banks in Ireland, the greater proportion of that is going to the covered banks. So we can see it rising during early 2009, falling towards the end of 2009, and rising then in late 2010. It has been falling recently, but not by an amount that would bring it down to an insignificant level. It still is very significant sources of funding from the ECB To this we must also add funding being sourced from the Irish Central Bank. So this is the unusual other assets category of the balance sheet of the Central Bank of Ireland. The Central Bank of Ireland offers funds to banks through what's called Emergency Liquidity Assistance, ELA, and this is packaged into the other assets item on the Central Bank of Ireland's balance sheet. The common belief is that everything bar about maybe 1.5 to 2 billion of this other assets category is emergency liquidity assistance provided by the Central Bank of Ireland to banks operating in Ireland, and this is mainly all going to the covered banks. A huge proportion of it has been provided to Anglo through the promissory notes, and the remainder then provided to the other covered banks. You can see this peaked at nearly 70 billion at the start of this year, then declined in the early part of 2011, maybe perhaps driven as much by the government deposits, and has been trending upwards for the past couple of months. If there was to be significant improvements in the deposit base of the Irish banks, we would be expecting their reliance on central bank funding to be declining. So if we combine the ECB funding that the covered banks are getting, as represented by the red line, and the Central Bank of Ireland emergency liquidity assistance, this green line here, we get a measure of total central bank dependence of the covered banks, and we can see that this hasn't been improving over the past 4 or 5 months. Has declined from the 155 billion it peaked at back in February of this year, but still is at about 127, 128 billion, a huge amount of money. So a massive amount of funding of the Irish banks is sourced from the ECB, and if there is to be a significant improvement in deposits in the Irish banks, we'd see it feeding through here. The banks would have a lower and lower reliance on central bank funding, but that isn't feeding through yet. So the deposits in Irish banks have declined quite substantially. Perhaps there's a suggestion that they're maybe stabilising, but I think reports of significant increases in deposits in Irish banks are somehow wide of the mark.